Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Well, I thought I was going to do this alone. I was all set to do it alone. I was figuring I would do this show alone because, well, Tom's on vacation. But you see, Tom recently got his new toy, which is a Tie-Line Via, which allows him to connect while on vacation. So he took the recording studio with him, basically, to Lake Chelan. And Tom joins us now, live and direct from Lake Chelan, Washington, where, Tom, what's the state of the fire right now?
Well, the fire, sadly, literally, we showed up Sunday and the phones all started going off right when we sat down. This is serious. And across the lake,
I believe you,
is the 25 Mile Creek fire, and it's 7,500 acres, still not even 1% contained. Kind of like you, they cannot contain you. So, it's,
I'm uncontainable.
Exactly. So here's the thing. It's horrible.
Yeah.
But right now, there's no wind. But when the wind comes up in the afternoon, the place turns, it's like you're in the middle of a chimney. So we're going to get out on the boat here shortly and have some fun, but then probably have to batten down again later.
Right.
That's the way it
Turn
goes.
on all the air filters, wear your masks.
Yeah, it's sad. Yeah, it's horrible. Yeah, back to the masks.
Hey, well, at least you've got the masks. That's
exactly.
There's one good thing about this.
Good point. We're all having a great time, so thank you for your thoughts.
I had thoughts. I just don't remember.
Uncontained
I don't remember
thoughts.
having thoughts, but okay. If you want me to have thoughts, I'll have thoughts. Hey, hi. Welcome to Talking Real Money, the podcast. I'm Don McDonald. That's Tom Cock in Lake Chelan. We're going to talk about money on this here podcast. Today, we're going to talk a little bit about these articles. We talk about the popular financial press a lot, and there is a relatively new piece in Bloomberg Business Week, and this is an ongoing article that they've been publishing since November called Where to Invest $100,000 Right Now. Well, actually, I think there's also a Where to Invest $10,000 right now, too.
There is, correct.
But they're all kind of...
They have $1 million, too, by the way, if you want to do that.
Yeah, you got $1 million, too. Wait, what is under $1 million? I'm not even going to do that because because there's just so much stuff. But here's the thing: what they do is they go to people, and I don't know how they determine who's the expert. These are all people who run wealth management, investment advisory firms. They're all, I believe, I checked several of them. I didn't check them all, but most of them look like fee-only firms, which we like. But they manage money apparently a little bit more to your liking as investors. It's the best way to put it. I'm sorry, but I think they're pandering to you because you want to be told where to invest. By the way,
this is still the number one question we get on the show, too, by the way.
Yeah.
I mean, it is, right? I mean, I got this money. What do I do now?
And the fact of the matter is nobody can tell you the right place to be in the future. But these guys, because their heads get all swollen and they like to think they're experts, all have these. And funny thing is, they all have different ideas about where the best place to invest is. And I personally think a lot of it is garbage. It's really confusing. And it gets even crazier when you dig into some of these people's suggestions, Tom.
Well, I mean, it's all over the place, right? One guy wants you to be in a hedge fund of hedge funds. That's rather expensive. Someone actually does mention something about classic cars because his clients are wanting to collect classic cars.
What they do is they ask them the real serious investment, and then they ask them for, quote, another way to play.
another way to play. I mean, this is part of the problem, right? People still have this belief that you're going to play the market. People still have a belief that you're going to find a guru, whether it's Jennifer Foster from the Chilton Trust, right? This is one of the people, or Melissa Weitz from Regent Atlantic, that people somehow, there's a guru out there that knows what's going to happen next, that see the future, et cetera, et cetera. And I think people still believe that because not just the financial services industry, but the media has played on this, right? They want to find that person. They're out there. So, and by the way, if you called us and asked us, I'll give you our answer here in a moment. Many of you have listened for a while, you would know. So yeah, this is a very silly thing. I mean, I think you found one where the fees were, was it 7%?
Yeah, that was
crazy?
One from, because they do this every quarter, and that was one from the first quarter of 2021. And I went back and looked, and it was, let me find it again. It was from Icon. Icon Wealth Partners out of Texas. And these guys charge up to 1.75% to manage money, which we think is too high. Although I found some of these guys were charging 2%. But here's what this guy suggested: a private credit portfolio.
That's right. Yeah.
Where you're buying you're buying other people's borrowing. Private credit through business development companies. And so Bloomberg found a way for you to play it with an ETF that is very small, the Virtus Private Credit Strategy ETF, which only has $24 million. And apparently they claim, get this, they claim to yield 8.8%.
Give me more of that. Sure.
Sure, but they have an expense ratio, because it's a fund of funds, of 7.6%.
So, really? So that doesn't that mean they got to be making like 16% or something?
Yeah,
to pay everybody back. Wait, that starts to sound like what's his name? The guy from Chicago. What was that?
You broke the code really, really quickly.
Yeah.
What does that tell you about the quality of the credit in which they're investing? See, this is one of the things we want you to learn to protect yourself. And one of the ways you can do that is by looking at the fees and looking at the return. And if the return plus the fees sounds like a lot of money, then the risks have to be proportional. They have to be.
Now, I give Michael Leverty credit. He's one of the experts they called on. He said most of their clients' capital is invested in public markets using low-cost mutual funds and exchange-traded funds. However, he goes into the private equity direct lending, et cetera, and he likes farmland as an investment hobby.
Farmland as an investment hobby.
Yeah, because he grew up on a family Christmas tree farm. He's seen firsthand the potential of agricultural. Oh, come on.
Well, and that's one of the reasons why I like the Icon guy. One of his favorite investments is he bought an antique map of Galveston, and he really likes antique maps. So, I kind of like him because I'm trying to get rid of my entire collection of antique maps. So I'm going to call him up. I got to tell you, he can have my entire 4,000 map collection for I'll give it to him for $50,000. The whole thing.
Okay. Wow. Jeez.
Probably
Does that
retail
include shipping and handling.
No, you got to pay your own shipping. That's FOB Florida.
FOB Florida. But let's unpack this just a little bit more. I find this to be investment pornography, right? I mean, if you called us and said this, we would say you don't have a plan if you don't know where the money should go, right? Because if I came into $100,000, I would say, do I need it to pay off debt? No. Do I need it for short-term cash flow? No. Do I need it for my long-term retirement plan? Yes. Then it would simply go into a portfolio that is already allocated between stocks and bonds, and what type of stocks and what kind of bonds. If something's under, down a little bit, then I'd be buying that. That would be it. There'd be no other cogitating on calf futures or cars or jewelry.
Why make it more complicated?
Beanie Babies. Yeah, exactly. Or Beanie Babies. Forgot those. And I think a little bit of this, Don, is FOMO, right? People feel like this era reminds me again of the late 1990s. You can remember the magazine cover where it said, everyone's getting rich except me. That's how people felt, right? I'm not in on these IPOs, the SPACs, all the good stuff where the real money's being made, and I gotta be part of it. So people want this sort of thing published. So again, back to what we believe. We think all money should have a purpose. You know, a short-term spending, long-term saving, retirement, etc. Chasing ideas, you know this, ideas, new mutual funds, whatever's hot is a horrible thing to do. And it should always, when you come into money, if you did come into 100,000 or whatever amount, it should always go into your plan. Your asset allocation is already set up because you already know what the purpose of all of that money is. So this really, it's kind of silly. And again, I know they put these things in publications online to draw eyes because this is what people want to see. But the people that do these things, I can almost guarantee you they end up with less.
Well, and the funny thing is, as you mentioned, a lot of these advisors start out by saying, well, most of our portfolio is diversified between stocks and bonds. And I would be willing to bet that many of them just do a stock and bond ETF or mutual fund mix, kind of like we do. But they feel the need, and I understand this, they feel the need to give the press the thing they want. And the thing they're saying, if you want to get written up, you got to give them something.
Bingo.
You got to give them something. And this press is good. I subscribe to a service where I can respond to reporters' questions. And I respond all the time.
Use an index fund.
I respond like 5 times a week to these things. And I've gotten published twice by U.S. News because it's like, what are the best bond funds? And I go, Vanguard Total Bond, the Fidelity Total Bond. There you go. Boring. You know, nobody wants my answers because they're too dull. But
you need to say that and then add like abstract art or classic cars or Beanie Babies or what about
antique maps.
That too, or Pokemon cards. Because there's a lot of money to be made there. Would be my suggestion.
You got to ignore this stuff. You really need to learn to ignore it. And if you look through the suggestions of the specific ETFs, when they can find ETFs, and you see ETFs with fees of 0.78, 0.4, 0.5. The cheapest one I think I saw in there was 0.25. And then realize you can buy an ETF that is invested in the entire market, every piece of it, for which you'll pay less than 0.1%. 0.1.
Yeah. I mean, that also in the fact that some of these are very, very, very small. That would make me very, very, very nervous.
Yeah.
To invest in anything with $20 million. Nah, that's crazy.
If you have questions or if you'd like us to cover something, you have something you think we should talk about on the show, please let us know. You can call us at 855-935-TALK, 855-935-8255, or you can send in your questions or ideas at talkingrealmoney.com on the contact form. And Tom, before I let you go back to your vacation and start boating around the Smoky Lake, the good news is that when Tom gets back to Seattle, to the Seattle area, he actually, by being there for a week, he has actually added probably about 2 or 3 years to his shelf life due to the effects of smoking. They say if you smoke meat, it lasts longer. And
okay, well,
what are you but an old piece of meat?
Throwing things around.
I'm knocking stuff
down. Got so worked up about me being an old piece of slab of meat. Yeah, good.
A slab of Donner Party flesh.
Donner Party of 6, Donner Party of 4. Got it. Yeah. Okay. All right. You got a question?
I do.
No question?
I do.
Okay, hit me. Because the grandkids are going to be back soon, and they're going to take the place over.
You can tell that is a high-ceilinged room.
Oh, it's very high.
By the echo,
It's like 50 feet up there. It's some ridiculous thing. Go ahead.
All right. He rented a house. This is not Tom's house.
Yeah. No, I do not own a house on Lake Chelan. Nor will I ever own a house on Lake Chelan.
The subject is Ultimate Retirement Distribution Strategy.
Ooh.
All right. Hello. I'm a fan and have been listening to you for a while now. I am 49 years old and have an investment balance of $1.8 million. I hope to retire at 53. I guess that's 4 years from now, with my wife, homemaker, and become full-time vagabonds in the RV lifestyle. Oh, you want to buy an Airstream? Got an Airstream.
Don has real estate.
Airstream and antique maps.
And you throw it all into one.
Let me know. Let me know what you want.
100,000.
We're having a big sale. We're closing everything out. We're going crazy.
This is it. There is no tomorrow. We're never coming back. Yeah, I got it.
Anyway, back to his note. I have adopted your investing philosophy and have 15% in small cap value, 15% in emerging markets, and the rest in VTWAX, Vanguard Total World Stock Index Fund. Admiral shares. I'm just throwing that in for all of you. The investing has been relatively simple. The withdrawal part seems a little more challenging. I want to stay 100% in equities till my dying day. I would like to keep 2 years spending in cash. When the market declines 25% or more, I will turn on the cash spigot and spend that until it's gone or the market recovers, since most bear markets recover within 2 to 3 years. When the market recovers, I will refill the 2 years in cash. I recently heard of the ultimate retirement distribution strategy. We've been talking about this for years. We never named it that. Good name. Where you take 5%. Does this sound familiar at all, Tom? Wait. Where you take 5% of the portfolio balance at the end of the year to fund the new year. He says, I haven't heard anyone speak of incorporating the cash cushion with the 5% withdrawal strategy. Does this seem like a good plan? Thank you.
Yeah, I mean, I think it is, because if you don't have any bonds, right, the cash becomes sort of a bond alternative in some ways. In other words, in a general sense, if you had some in stocks, some in bonds, you could pull from the part of the portfolio that went up. You'd have bonds for stability. In this case, as he correctly points out, stocks go down a lot. You've got the cash to draw on. Yeah, I think that's a good strategy. I mean, again, my urging always on when people want to be 100% equity is kind of why. If you're 53 and you've won the financial game, you have the assets to live out your rest of your life. What's the point of living through those ups and downs, the scary times that are ahead? That would be my only question.
Yeah, but with the right attitude, I can see how if you've really truly steeled yourself to the fact that stocks will go down, and they will go down a lot at some point. Bear in mind, sir, that it could be like half your money. It's going to be painful. So remember that, half your money. The idea doesn't sound bad because, as you said, it's almost like having it in bonds. But if you were to add the 5% ultimate retirement distribution strategy, I don't know what's ultimate about it, where you take 5% of your portfolio and use that to fund the new year, then in essence, that brings you to 3 years. See, if you're doing that every year, then you're already funding the next year. So you just have this emergency 2 years beyond that to fund the long-term decline in the market. For that reason, I can see changing that 2 years of expenses from cash to higher quality, like U.S. government, short intermediate bonds. Because while they might be, they will at times go up and down a little bit, they're not going to be horrifically volatile because of the short-term nature of the bonds. And you should eke out a slightly higher yield from those.
Yeah, I mean, here's another thing to think about in terms of the VTWAX plus U.S. small value and emerging markets. That is not a ultimate asset allocation. In other words, you're underweighted to many asset classes that could be more productive over time. If you're somebody who's into all this, you could spend a little more time, own a few more exchange traded funds or mutual funds, and really be better diversified than just the wax plus mutual funds. Wax is fine, and it's a matter of time. Yeah, go ahead.
When you're retiring and you're going 100% equities at that point, I don't know that I would want to really get into the complication of managing all those and the rebalancing. You have to remember there's going to have to be a level of complexity, and you've got to rebalance at least annually to make this all work. So I don't know. It depends on how simple you want to make it. But I like the idea. Yeah. I think this is actually a pretty smart idea.
Yeah, no, I think he's on it. And I love the fact he's thinking about it 4 years in advance. Got a plan. And Don's going to give out his number here in a minute. You can either have the home in Florida or the Silver Bullet. It's up to you.
Totally or the maps. Actually, we're at 3 price points.
I thought we're throwing the maps in on something. Just another piece of the real estate.
Buy the house in Florida. You get the maps for free. They're already there.
Oh, they're ready to go. Good
because
question.
I don't do the map sales business anymore. They're just sitting there. I got to sell them to somebody.
You do indeed.
Know anybody who needs maps?
No,
wallpapering.
Really. Nobody uses maps anymore.
Nobody.
They're beautiful maps. I have one in my my office at home. I love it. So
they're all 19th century maps and prints, and I've got
which matches up with you and I too.
Thousands
So
of
good.
them. Thousands. All righty. Well, thanks for being a part of our little get together. Remember, our number is 855-935-TALK, 24 hours a day, 7 days a week. And send your questions or comments in to talkingrealmoney.com. You can even speak them there, just clicking on the microphone button. Please tell friends. Please tell relatives. Please tell enemies. Oh, that's right. You're not talking to your enemies. But if you do, tell them about the podcast. And if you love us, then...
And the classic cars.
And the classic cars. If you love us to pieces... Even if you don't use them, go to Apple Podcasts, get an Apple ID, and it's free, and leave a review because those make us feel good, except for the bad ones. They make us feel bad. Right?
Yeah, that's really bad. But not so bad. I'm not going to go out on the lake right now.
No. Okay, and so on Saturday, join us for Smoked Tom, and thank you. And wait, is that kind of like really smoked turkey? Smoked Tom?
I think that's pretty darn close. I'll say that. So yeah.
Boar's Head Smoked Tom. It's like the Donner Party joke again, coming back to haunt us.
That's bad, man.
All right, I'm leaving. I have things to do. I got a job. You got a vacation. Just have fun. All of you, thanks for being a part of our podcast. The next couple of days, unless Tom insists on joining us again, I may be alone for the podcast. We'll see how it goes.
Oh.
He may get lonely and want to do it with me.
Probably will.
Probably. Have fun. Talk to you soon. I'm Don. That's Tom. Hanging out. Breathing in smoke and talking real money. All right, dude.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.